There is this report that we've been seeing about the delay in the Blackwell chips and what that could potentially mean as an effect for some of those customers like a Meta, Google and Microsoft. How are you watching that story? Is this going to have an impact, do you think?
I think what happens as it pertains to Nvidia is they may have a delay of the Blackwell series chip, could be as long as about 90 days. But I think in the meantime, they're so far ahead with their technology that no one is going to come in that vacuum and steal market share. So it's theirs for the taking. I think their revenues are simply going to be delayed for about a quarter or two. And because they're the most important cog in the AI supply chain, sure, it's going to impact the AI infrastructure building of some of those hyperscalers, as we call them in the States, the four big companies that are spending billions and billions on building their AI infrastructure.
In the fast-paced world of the stock market, dramatic highs and lows often dictate investor sentiment. But as the dust settles from last month's downturn, one major player is set to captivate Wall Street once again. Nvidia, the titan in the graphics processing unit industry, is strongly positioned for a rebound, fueled by an impending earnings report that many believe will be a significant AI catalyst. With renowned financial institution Mizuho bumping up Nvidia's stock forecast, citing continued strong demand for its cutting-edge chips, all eyes are now on what's next. There have been whispers about possible delays of Nvidia's much-anticipated Blackwell chip, but Mizuho assures investors that any postponement will merely defer revenue, not diminish it. At the center of this burgeoning excitement are Nvidia's H100 and H200 chips, which, despite constrained availability, continue to draw unparalleled demand. Jensen Huang, Nvidia's CEO, stands at the forefront of this technological renaissance, striving to keep Nvidia ahead of the curve. So let's have a detailed explanation of Mizuho's latest forecast and explore the motivations fueling it. But before we do that, if you want to keep up with the latest Nvidia updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. That said, back to today's video.
Well, I know Sam scratched this point and she raised this issue about, the AI hype, being bullish on tech, which you are broadly speaking. But drilling it down to specifics, if a activist fund manager with the credibility of Elliott management says that there is an AI overhype and that these stocks are overbought, do you think the pressure builds to the downside?
I think we need to distinguish between what I call AI 1.0 and AI 2.0. 1.0, I continue to be very comfortable with. Those are the infrastructure building names. Typically semiconductor companies, data networking companies, and data server companies. Now, the four hyperscalers have promised, I guess nobody promises, but they've said recently in their conference calls that over the next 12 months, they are going to spend $227 billion combined on AI infrastructure. I don't think they are going to change those plans. And they also say that their capital expenditures in the year afterwards are going to accelerate from that very high base. So I like all those stocks. Then you get to the AI 2.0 stocks, which I'm not sold on yet, so I don't own a single one. These are the companies that claim after all the infrastructure building spending that they will have these marvelous money-generating products featuring AI on the other side. I'll believe that when I see it. But for my thesis to be right, I only need the AI 1.0 stocks. As of yet, I don't need the AI 2.0 stocks.
Mizuho's recent restatement of Nvidia's prowess isn't just hearsay. According to their latest note, investors should look past the speculation about Blackwell chip delays. The undercurrent of demand for Nvidia's high-performance GPUs remains relentless, a testament to the company's uncompromising edge in AI innovation. A symptomatic downturn, where Nvidia's stock plummeted nearly 20%, has many grasping for explanations. Yet, as Mizuho Managing Director Vijay Rakesh pointed out, demand remains unchanged. This assertion, gripped with unmistakable confidence, aligns with observable market behaviors. The earnest furor about Nvidia's upcoming earnings report is more than justified. Nvidia's current generation H100 and H200 chips reflect a tight capacity, signaling not a wane in demand, but a titanic market appetite. Any hiccup with Blackwell will, at most, delay earnings by a couple of months, a delay inconsequential in the larger trajectory of Nvidia's growth. With AI-rendered graphics and computations becoming a linchpin in various sectors, there's no brainer why Nvidia continues to ride the crest of innovation wave. For those unacquainted with Nvidia's machinations, the H100 and the H200 chips illustrate a leap in technology, earning plaudits for their superb computational power in AI tasks. The average selling price of these GPUs has only been elevating, reinforcing incredible revenue streams. Mizuho's perspective envisions that Nvidia's next-gen Blackwell NVL72 GPU rack could fetch staggering prices around $3 million. Parallelly, its GB200 superchips could hover between $50,000 to $70,000 each, illustrating a seismic advancement in the realm of processing units pricing. Compare this to Nvidia's H100 chips costing around $40,000 and the H100B100 GPU rack at $300,000 to $400,000. The increased price points indicate burgeoning financial prospects. Hence, Mizuho adjusted Nvidia's price target from $127.50 to $132, forecasting a potential 26% uprise from Thursday's closing. With Nvidia still steering the technological vanguard, their strategic price adjustments and robust demand profiles could deliver a noteworthy upswing in stock prices. So why do some investors keep investing in Nvidia at the moment? Let's find out. Hello, and welcome back to Investocracy.
Nvidia and other chip stocks surge over 5% Thursday as tech led a market rebound. Joining us now with more on the sector is BofA Securities Senior Research Analyst Vivek Arya. Vivek, great to have you with us. I know we highlighted the 6% gain that Nvidia saw yesterday, but if you take a look for the week, Nvidia is actually underperforming the Philadelphia Semiconductor Index. Nvidia's down about 2%, and the SOX is up almost 3%. And there have been doubts since probably that June 20th key reversal date where Nvidia shares hit a new high and then closed on lows, where the stock has really been struggling. So where do you come out on how the stock is valued and if there was just too much hype in the stock?
Good morning, Melissa. So I think practically speaking, whether it's NVIDIA, whether it's the rest of the semiconductor space, we could stay volatile until NVIDIA reports later this month, and we have the required reset in any delays associated with their new Blackwell chip, which I think is actually not that big. But if we take a step back, we have to separate what's happening in the market from the fundamental side. I think what's happening in the market and the volatility has nothing to do with semis. But this is where all the gains were because AI was the best game in town. And that's why these companies saw the most drawdown also during this volatility. But let's look at the fundamental side. Number one, every one of NVIDIA's top customers, whether it is Amazon, whether it is Meta or Microsoft or Google, they all said they are investing more, not less, in AI. Number two, if you look at NVIDIA's top supplier, Taiwan Semi, they had very strong outlook. In fact, this morning they gave very strong guidance for their last month of results. And number three, if you look at NVIDIA's top system partner, Supermicro, I know they got dinged on the margin side, but if you actually look at the sales growth that they showed for the next 12 months, up 90%, that is 2 times what people are modeling for NVIDIA's growth, and NVIDIA usually outgrows them. So I think the fundamentals are still extremely strong, but the market is going to go through its volatility, which we think should subside by the time NVIDIA reports its results, because the fundamentals are very strong. And the final point on valuation, if I take the Mag 7 outside of NVIDIA, they are trading, and the broad market, it's trading roughly 2 times its earnings growth for next year. NVIDIA is trading 0.8 times, right? So it's trading less than 30 times for over 35 to 40% earnings growth. So I think fundamentals are strong and valuation is still very compelling.
The sheer momentum surrounding Nvidia's latest announcements paints a vivid picture of untapped potential. With Mizuho's optimism fueling investor confidence, Nvidia is poised to capitalize on burgeoning advancements in AI, despite the slight deferrals in product launches. Analyzing the intricacies of the Nvidia stock reveals a narrative ripe for investment. Nvidia's current standing at approximately $104 still wields ample promise. The projected uptick to $132 isn't merely optimistic, but rational, considering Nvidia's consistent trajectory of innovation and market leadership. The sporadic industry tremors, like stock volatility tied to speculative chip delays, fade against the robust spectrum of AI initiatives Nvidia unfurls. The forthcoming earnings report will serve as a decisive juncture. As Wall Street braces itself, Nvidia aficionados and cautious investors alike find themselves on common ground, anticipating a trend that aligns with Mizuho's bullish forecast. Already, Nvidia's expanding GPU repertoire has actually been reshaping how industries interpret data, tested by computational exigencies from diverse sectors like automotive, healthcare, and public safety. With from Nvidia's technological odyssey, the merits compound significantly. Investors benefit from a patented approach towards innovation, prefacing value maximization and market domination. Nvidia's resolute lead over competitors isn't sheer luck, but the fruit of strategic planning and prosperous scalability in AI adaptations. So should you invest in Nvidia at the moment? Let's wrap this up. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Unless there's a doubt on the earnings growth. and I guess that's the key part of the equation where we'll get some more guidance from NVIDIA. In terms of the reports of the delay to the Blackwell chip, the reports first came out of the information. And I'm wondering, it's interesting because when we hear about delays to other hardware items, you think about it, is it going to be a sale denied or a sale delayed? So in your view, these are sales that will be delayed, correct? That these sales will actually happen. It's just maybe it's pushed out a quarter, 2 quarters, whatever.
Yeah, so if we look at demand for NVIDIA's Hopper product, which is the product before Blackwell, demand for that is off the charts right now. And that's what we heard from Supermicro. They got it well above consensus, and a lot of that is actually based on the Hopper product. Because we just have had this period of insane supply constraints in the industry. And just because Blackwell is delayed a little bit doesn't mean the supply constraints have gone away. So any customer who can put their hands on Hopper is still able to buy that product. Now, when it comes to Blackwell, there are many different versions of Blackwell. The most extreme versions that are in the highest, most densest version of the rack scale architecture, they are perhaps pushed out by a quarter or so. So that, I think, can be reflected in numbers. But when it comes to other versions of Blackwell, I do think that they will start to ship some Blackwell later this year. But the key point is that demand in combination of Hopper and Blackwell, I still think is extremely strong for them.
In closing, NVIDIA's track record and forecasted ascension make it a shrewd pick in modern portfolios. The dynamic interplay of consistent demand, price strategizing, and innovation renders NVIDIA an unparalleled narrative on Wall Street. Investors ought to reflect. Does the vision of stroking a market-winning AI card enliven their financial ambitions? With NVIDIA's stock currently positioned pro-securely, those wagering on its exponential growth might just ride the crest of transformative market waves. The stock market, intricate and ever-changing, requires acumen similar to that of NVIDIA's strategic nuances. Bearing in mind several elements like AI efficacy and GPU advancements triggering upward motion, staying tuned to NVIDIA's saga might just be the key to informed investment decisions. But what do you think about NVIDIA stock? Is it a buy at the current price? Let us know your thoughts in the comments section. And don't forget to tell us what your valuation for them is. If you would like to know what NVIDIA has been up to these past few days, go ahead and click on the next video on your screen. See you there.